When Elon Musk purchased Twitter for $44 billion, he inherited a company that had not turned a profit for 8 of the past 10 years.
They were having trouble attracting new users. They were having trouble increasing the revenue.
It's tough to determine the state of Twitter's financial health now that it's a private company. But analysts have been able to piece together an assessment from the company's last regulatory filings and Musk's public statements. S&P data showed that Twitter had less than $600 million in net debt before the takeover talks.
Now, post-acquisition, they have $13 billion in debt, and that's a major burden on their shoulders.
The company last year generated just over $630 million in operating cash flow, while this new debt could potentially swell its interest payments to more than $1 billion a year.
That's a lot of money that they have to pay down with cash. And where are they going to find that cash?
Just 1 week after taking over the company, Musk said in tweets that Twitter had suffered a massive drop in revenue and was losing over $4 million a day. The Journal has reported that a number of big advertisers have paused their spending on the platform. Nearly 90% of Twitter's revenue last year came from advertising.
Analysts have pointed to this being a significant decline in revenue as major companies leave over concerns over what's the future of the business model, what's the vision under Musk.
To make ends meet, Musk has moved quickly to slash costs, including cutting the company's staff by half. Filings showed Twitter had 5,500 full-time employees at the end of 2020 and 7,500 a year later. Based on the company's most recently disclosed median pay figure, the layoffs of about 3,700 people could save Twitter roughly $860 million a year. This represents about 15% of Twitter's $5.57 billion in costs and expenses last year.
Analysts have noted that this could do more harm than good because some of the company's most critical engineers and developers and marketers are heading out the door.
The billionaire owner has also been trying to add subscription revenue with the Twitter Blue service, which gives users a blue verified checkmark if they pay $7.99 a month.
It's unclear whether there's enough demand for that, but subscription revenue is potentially a new outlet, a new opportunity to make up for the revenue that's been lost amid the recent advertiser exodus.
In an all-hands meeting with Twitter staff on November 10th, Musk warned that bankruptcy is a possibility for the company. Analysts and academics said even if these financial challenges continue to mount, there could be other options.
He could raise equity, he could buy back debt from lenders, potentially at a very deep discount. In the event that the company does go into bankruptcy, well, this is not Musk's preferred option. Okay? He put $27 billion of his own money in the business, and that likely means that those funds will be entirely wiped out. It remains to be seen what direction he'll take.